All right, today we're going to be talking about the 9 and 200 EMA. I only like to use this on the 5 and 10 minute chart. Um, the other charts, it still works, but these two are the best time frames for intraday. I'll find an example and I'll show everybody what I'm talking about. So, day before yesterday, SPY started curling, coming into it. And you can see right here where the 9 EMA came into the 200, it flattened out. The candle came directly on top of it, and that's when a reversal or a pullback usually happens. That keeps you out of the trade. So what I'm waiting for is the crossover. So none of this, I would have not entered long here because that crossover did not happen. This will help you be more patient. Instead of having to take 10 trades, you can take one. So if the 9 EMA flattens out coming into the 200 EMA, it usually means it's either going to reverse or it's going to pull back. And now is not the time to enter long on this trade. Now you can see over here what happened. We get a second opportunity with the 9 EMA coming into it. The candle pulls into the candle is on the side of the 9 EMA and not directly on top of it as it was over here. We got a tiny little volume spike. We broke out and then consolidation happened. This consolidation right here is what we call a micro pullback. Healthy chart. It just needs to consolidate for a minute. So you can look down here and see low volume through that consolidation, and then we move again. So flat EMA means don't enter. If you're looking to go long, do not enter, leave it alone. The breakout happens when it crosses. It could have easily broken downwards right here and, ran downwards. But if we're looking to go long here, wait for the crossover. Do not enter until the crossover happens. Because if you rush over here, you're probably going to get stopped out several times and you have to do it again. There's no panic involved with this. Once the crossover happens, you don't even have to enter right here. You can wait for consolidation period. I always enter when the crossover happens if we have a little bit of volume going into it. Once it happens on the 5-minute chart, if it's a trend day, it's probably going to happen on the 10-minute chart. So if you missed a 5-minute entry, you can probably get one on the 10-minute chart, and I'll show you guys what I'm talking about there. All right, so here's the same chart right here, and you see over here is what we were talking about. And then you can see, okay, now the 9 EMA is coming into it very sharply. The crossover, you can see we broke, the candle hit the 200 EMA right here. We rejected it. What did we do? We pulled back into the 9 EMA. The 9 EMA is still pointing forward. So if we entered on the 5-minute chart, this is going to confirm that we can hold this trade. The 9 EMA is pointing straight up into the 200 for another explosive move. So we got two explosive moves on this day, which was the day before yesterday. And it was when the 5-minute 9 crossed the 200. And then again, when the 10-minute 9 crossed the 200. It's very simple, very easy. Another way to think of this is how sharp it's moving into it. So over here, we're on the 5-minute chart. You can see when we rejected the 200 on the 5-minute chart, it was curling. Right here on the 10-minute chart, when we're breaking through it, what do you see? It's pointing straight up. The chart is going to go the direction the 9 EMA is pointing. If the 9 EMA is pointing sideways, the chart is going to go sideways or it's about to reverse. So this is a good thing to see because you know it's going to break right through it and it's going to keep running. So two big moves that day. Both of them were the 5-minute 9 and the 10-minute 9 crossing over the 200 EMA. It's as simple as that. Any chart that you look at, when you see this setup happen, you know there's going to be a big move, whether it's a reversal or whether it's continuation. And we'll find another chart that we can see here. Trying to find a kind of a trend day type move. But either way, you can look here and see the 9 EMA is too far from the 200 EMA. This is a good example. Most people want to buy the breakout, and look what happened, knife candle. Why did that happen? Well, because the 9 EMA has not crossed the 200 EMA yet. Again, look what happened, another knife candle. Why? Because the 9 EMA did not cross the 200 EMA. Look when we started moving up in a bullish trend, when the 9 EMA crossed the 200 EMA. Once that happened, every pullback held the 9 and 20 EMA the rest of the day. So simple, so easy. Now, again, over here, We're pulling down into it. Look how sharp it's moving down. When you see that sharp 9 EMA, you better get ready. Right there. Look how sharp it is. And look how big the drop was that followed. Let's go find another one. Here's a pre-market example. Looks like it's trying to break down right here. The 9 EMA could not cross the 200, and we set up in a trend all day. And then look right here, we're pulling back into the 200 EMA. We're looking for it to cross over so we can continue, or to go flat so we can go long. The 9 EMA is coming into the 200. It's flattening out. We could go long over in this area, and look what happened. Uptrend. And this was just a chop day. There was a head and shoulder right here, so this was an easy chart to look at, but I wouldn't have even been looking for the 5 minute or the 9 and 20 on that. That was just a head and shoulder pattern. And we might get this pattern 2 or 3 times a week, once a week, sometimes 5 days a week. You never know. You just have to be ready for it. Okay, over here, look here. The 200 EMA is broken, but why did it not continue? The 9 EMA is not close enough. Again, we keep breaking the 200, but it keeps reversing. A lot of people want to short this because it's breaking the 200. Well, look where the 9 EMA is. The 9 EMA has to be there with it to get the move. When we finally got the move over here, look, 9 EMA crossed here. We pulled back up. We confirmed support, which was the 200, is now resistance. It was just wicks over it. Then we continue down and we can play that move. Right here, we had a double bottom. It's curving too far away. We know it's not going to continue. Anytime the 9 and the 200 EMA are close together, we're always going to see a move that follows. We just have to wait on the direction of that move. It curved, bounce back up, come back down, same thing again. Curved here, push back up into a trend. And I could do this all day long, but I think you guys kind of get the picture now. When I'm alerting the 5 minute 9 EMA, 200 EMA, 10 minute 9 EMA, 200 EMA, we don't know the direction that it's going to move. We're waiting on it because we know a big move is going to follow that. Here's another great example. It happened twice on this chart. Straight through, the 9 EMA was knifing down, and look at that massive move down. All right, now we're looking for a reversal back up, whatever, double bottom play it to the top side. We start scaling here. We get out of our position if we're long over here. Why? Because the 9 EMA is curling before it gets to the 200 EMA. We know it's not going to break. And look what happens. All day, every day this happens. Well, not every day, but any day it does happen. You guys kind of get what I'm saying. It's guaranteed moves, money. Look, 90 EMA is way up here. 200 EMA is way down here. They come down, they start to form that wedge. They cross over, and boom. And it's always good to identify those trend days too by swapping to the 10-minute chart, because sometimes the 5-minute chart will fail. You can swap to the 10-minute chart, and the 5-minute chart's failing because the 10-minute 200 EMA is rejecting. But the trend is still holding based off of that 9 and 200 EMA crossover. But you guys can see, stop getting eager to trade and wait for stuff to happen. This is going to be the last one I show. Chart looks bearish because we have this zone over here, whatever, all the previous lows being broken through here. So I know probably a bunch of people shorted this. All right, while the lows are broken, I'm going to short this right here. Look what the 9 EMA is doing at the 200 EMA right there. It's curving. It's curving. And then it reversed. That's all we have to look for, and that's going to make everyone's life so much more simple. This is one of the best things I have ever found in trading, and every time I see it, I cannot wait to trade it, but you have to be patient and wait for it and stop trying to jump in these trades early.